Ladies and gentlemen, welcome back to the channel. Here in today's video, we're actually going to be covering a lot. We're going to be going over the broader markets this week. The economic data that we have is massive. Jobs report, unemployment, JOLTS job openings, all of that. That needs to be talked about. Okay. We have seasonal weakness on Monday and Tuesday that you need to be aware of in case anything weird happens. We're going to go over your broader market news today. It does look like Trump is going to meet with the top 4 congressional leaders tomorrow and hopefully avert a government shutdown. That's the hope. We will obviously see what happens. We will be going over my expectations a bit in this video for Tesla stock and this week, what I think could happen, and your Tesla stock breaking news today. So we have a lot to get into. Hit the like button, subscribe to the channel if you have not done so already, and check out that link down below in the description of today's episode. If you want to come join the trading community, come invest in these small cap AI stocks, these quality names before Wall Street does, before Wall Street understands the opportunity. We strive to be very early, and that's how we have performed so well this year. So check it out, link down below in the description of this video if you would like to come check it out. And with that said, let's get into today's episode. Now, we don't have much for Tesla stock news today. We did have quite a bit of news yesterday that we covered, but it is definitely starting off as a slower Sunday. We do have this here that Tesla is sending out texts, they're running ads, they're emailing prior Tesla clients, calling them, in-store education. They're doing whatever they have to do to get the word out about the $7,500 tax credit that ends on September 30th. So again, that's the big catalyst this week for Tesla is delivery numbers. And that's really, in my view, going to be the difference between Tesla going into the 500s or back into the 300s. High 300s, albeit, is what does that delivery number look like? I think it's going to be much better than expected. As I said in the last video, I think Tesla could deliver over 500,000 vehicles. Wall Street whisper numbers right now are about 430,000. The stock is probably pricing in close to 450,000. So you really got to beat that number. And I think Tesla is going to, and that gives us the next leg higher in Tesla. Likely could see a rally into the 500s. That would not shock me at all, considering we have delivery numbers on Thursday. Seasonal weakness ends starting on Wednesday. So starting on Wednesday of next week, you don't have that overhang of the bad September seasonal weakness over your head anymore. And Tesla has done very well despite the September seasonal weakness. So it wouldn't surprise me if Thursday's a good number. Tesla could rally quite hard on that. Now, if for whatever reason we come in on the low side in like the low 400,000s or something, like 420,000, 430,000, kind of miss expectations, don't be surprised if Tesla stock does take a move lower down to the 20-day moving average at about $387 per share. That is your 20-day moving average currently, but that is not my base case expectation. But this week, I think is going to be crazy for Tesla. Like, there's a wide range of possibilities in where the stock could go. Not just because of delivery numbers. Yes, that's a huge catalyst for Tesla, but we have a lot of other news and catalysts coming this week as well. So starting off on Monday, you're going to have Fed Hammock that gives a speech, pending home sales month over month, year over year, Dallas Fed Manufacturing Index, Fed Mausoleum, Fed Williams, Fed Bostic, some data out of China, but that's pretty much it for Monday. On Tuesday, you have your JOLTS job openings. You're expecting 7.1 million job openings, so a drop of about 80,000. For Tuesday, we have S&P Case-Shiller home price year over year, expecting that at about 2.3%. House price index month over month expected to be slightly positive. Year over year expected to be up about 2%. S&P Case-Shiller home price month over month expecting to be slightly lower. Chicago PMIs are expected at 40. Last month they were at 41.5, so you are expecting a little bit of weakness there. Jolt's job openings expected to fall to 7.1 million from 7.181 million last month. So a decline of about 80,000. Best way to think about this is if people are looking to hire more than typically, that's a sign the labor market is better, right? If people stop trying to hire as much, that's a sign the labor market is weaker or weakening. So that's going to be a very important data point that we get on Tuesday, because again, throughout this week, we're going to have bigger sets of economic data coming out. And that's going to be the first kind of indication of maybe how Friday's jobs report is going to come out. Now, again, Dallas Fed Services Index. Fed Goolsbee speaks on Tuesday. That is pretty much it. On Wednesday, you do get the ISM manufacturing PMIs, expecting those to actually go up. Employment is expected to go up as well. You will get the ADP employment change. That is the essentially private payroll number. You're expecting about 30,000 job ads. Last month was 54,000. So you are expecting a little bit of a slowdown and to be pretty low overall. Construction spending expected to be slightly negative. ISM manufacturing new orders expected to rise a little bit. Manufacturing prices are actually expected to fall a little bit. So we'll see that it's going to be important data coming out on Wednesday. Thursday, Challenger job cuts. We're expecting a big rise here from about 86,000 last month to 150,000, which this is essentially planned layoffs, right? So our company's planning on laying more people off. According to the Challenger job cuts, yeah, you're expecting this number to almost double. Typically, when you have bearish expectations, it sets you up for a positive surprise, usually. So we'll see if we do get a positive surprise there. Now, initial jobless claims, also a very important data set in recent times. You're expecting 220,000 unemployment claims for the last week. And last week was at 218,000. That actually surprised to the downside. And some of your risk-on stocks did not like it because it means less rate cuts. But again, let's be honest. You want to see good economic data. You want to see the labor market doing well, okay? So initial jobless claims coming in on the low side, no matter how the markets respond to that initially, that is always a positive thing, okay? So you do want initial jobless claims to come in around expectations, if not lower than expectations. So that's for your Thursday. Friday's the big day. Non-farm payrolls. Last month were 22,000. You're expecting 39,000 as the consensus, and the forecast on Trading Economics at 50,000. So you are not expecting a good number here at all. A lot of Fed officials have said the break-even rate for jobs is anywhere from 0 to 50,000 a month to keep the unemployment rate steady. So we're going to get that non-farm payrolls number. Then we're going to get that unemployment rate. What happens to both of these will be important, right? Do we see the unemployment rate go up? Do we see it remain stable? You're expecting it to hold steady at 4.3%. But again, as Jerome Powell said, if we start to lose some jobs, you could see a rapid rise in the unemployment rate, which is not going to be great at all. You get average hourly earnings, month over month, year over year, participation rate, average weekly hours, government payrolls, manufacturing payrolls, and non-farm payrolls private, the U6 unemployment rate, as well as smaller different data sets that come out at the same time. At 10 o'clock in the morning on Friday, ISM Services PMIs. Now, PMI stands for Purchasing Manager Index. So, again, it's not hard data. It's survey data. And it's expectations. But Wall Street pays a lot of attention to this because expectations tend to precede reality, right? If everyone's expecting an outcome, economically speaking, it tends to happen. Now, it's kind of backwards in the markets. If everyone's expecting a certain outcome, the opposite tends to happen. But For an example, if everyone's expecting, the economy to get worse and their business to slow down, then they probably stop hiring, they probably start being cautious, and that is a self-fulfilling prophecy, right? So that is why a lot of people pay attention to the PMI data. Now, you will also get services, employment, expecting that to rise a little bit. Business activity is expected to fall a little bit. New orders are expected to fall a little bit, and prices are expected to fall a little bit. So that's going to be a big component of Friday as well, is, again, jobs numbers, unemployment rate. But what about ISM services prices? That's the most important sub-component of the ISM data that markets really pay attention to. So this week is a big one as far as economic data. Now, again, on Monday and Tuesday, you are going to have seasonal weakness that works potentially against us, okay? Especially since there was not any real progress over this weekend of keeping the government, open. Wouldn't surprise me Monday and Tuesday if they are a little bit weaker, just because you're looking at a government shutdown Tuesday at midnight if a deal is not finalized. Now, typically, stocks don't care about government shutdowns, but in this, economy where it's a little shaky, people are a little nervous, a government shutdown, may be seen as more of a negative catalyst than it otherwise would have been, okay? Now, there is news that Donald Trump is going to have a meeting with the top 4 congressional speakers or members, right? Schumer, all of them, to what looks like try to keep the government open, try to get a deal done, okay? That's going to happen tomorrow. We'll see how the markets take that, or what time that happens. If it happens early in the morning or something, and we start to get some news coming out that's positive, well, that could have a positive impact on markets as well. And you can actually see the headline. What? Not the second. You can actually see the headline here. It says top 4 congressional leaders to meet with Trump at the White House on Monday. Again, I don't know what time that is. The president's schedule is not released. I'm sure it's going to be in the morning at some point. So it wouldn't surprise me if we're waking up to some headlines on maybe keeping the government funded. That would be the best possible outcome to start off this week. In the news today, the Trump administration plans to end the Gaza war with immediate halt to all military operations, per the Washington Post. Also in the news today, OPEC Plus will likely raise oil production quotas by at least 137,000 barrels per day at the October 5th meeting, according to sources. Higher production with stable demand leads to lower prices. So lower oil prices should be in the cards tomorrow. Trump says there's a real possibility for success in the Middle East. Trump says we will get it done. And Chinese leader Xi Jinping is planning to press Trump to formally state that the U.S. opposes Taiwan's independence. And Trump will be in attendance of a meeting with top generals on Tuesday, according to the Washington Post. I reported on this last week, but there was a kind of a surprise meeting scheduled at one of the military bases, I believe in Virginia, where it's going to be like top, Secretary of War, like your top people at this meeting, and people are like, what's the purpose? What are they going to be talking about? Well, now Trump's joining. Could just be like a ceremonial kind of thing, just to do it because, but we'll see if any headlines come out. Now, as far as earnings this week, not too much, okay. Carnival reports Monday pre-market. Jeffrey's Vail Resorts Monday and after hours. Tuesday, Paychecks in the morning and Lamb Weston. And then Tuesday and after hours, you have Nike. And then Wednesday, pre-market, Conagra, Resolve AI. So, yeah, it's going to be some interesting names. Look at the CNN Fear and Greed Index. It's sitting at 53 today, which is neutral. again, even though this market has done pretty well in September, there's a lot of bears out there still, and we'll look at that in just a moment. Market momentum is neutral. Stock price strength is greed. Stock price breadth is neutral. Put and call options greed. Market volatility is neutral. Safe haven demand is neutral. Junk bond demand currently in fear. If we take a look at the AI investor sentiment survey from last week, we still have bullish investors at 41.7%. We have neutral investors that climb from 16% to 19.1%, and bearish investors that fell from 42.4% to 39.2%. So there's almost an equivalent amount of bulls and bears out there. Like, it is a battle right now. Even though stocks have done very well, when you have this many bears out there, it likely means stocks continue to move higher. As much as some people don't want to see that, that's the most likely path ahead. I think we're setting up for a very strong rally into the end of the year. How could we not? Unless we get some kind of shock event, it seems unlikely to me to see a shock event, although that's kind of a black swan event in nature, so kind of hard to foreshadow. But minus any kind of black swan event, the momentum is to the upside. Wall Street's really going to start focusing on 2026, and that looks like it should be a pretty damn good year with rate cuts, big beautiful bill provisions starting to kick in about mid-year next year. Consumer hopefully can recover a bit. Likely upside to earnings expectations. AI is alive and well in this AI Cold War with China. There's a lot of reasons to be optimistic. And, I think that fuels the end of the year rally. Now, if you look at the percent of stocks trading above their 50-day moving average, currently at 59.07%. So there is definitely strength internally in this market. You're sitting at the higher side of where we've been in the last 5 years, which, is a sign of strength. Now, again, for Tesla stock this week, I think the delivery number on Thursday mixed with overall what the markets do on Friday with the jobs report is going to be big. Now, assuming the jobs report is good on Thursday, on Friday, assuming the delivery numbers are good on Thursday, you could have a situation where Tesla goes up quite a bit on Thursday. 10, 15-ish%. 10% move from here puts you at about $485 per share. A 15% move from here puts you at about $507 per share. But then imagine a situation where, again, the jobs report is positive on Friday. You could have, a situation where Tesla has a lot of fuel to move higher here. Maybe even into the 520, 530 level this week would not be a big shocker to me. Like, I won't be surprised if that happens. And vice versa. If the delivery number is not great, 430,000 or so, let's say, it kind of meets expectations, doesn't really impress anyone, and you have a bad jobs report, then you're definitely going back down into the 300s. So I'm looking at like probably a $50, $60 swing for this week. $500, maybe more to the upside than the downside, I will admit. But you could also be looking at like a $50 swing lower as well. Could put you 390 or so by the end of this week if things do not go well. So yeah, it's going to be a crazy week for Tesla. Let me know your thoughts on this down below in the comment section. Hit the like button and subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.